Well, g'day there everybody. Thanks a lot for joining me on this Wednesday afternoon market recap. We do have approximately 10 minutes or so left in today's session. However, we do have adequate subject matter to move through. It has been a very profitable week. I understand we're really only halfway through it, but really this is a continuation off from a lot of positions that we began to build last week in anticipation of the Dow Jones Industrial Average breaking out to the upside and pushing up towards that 26,435 area. Today, we're seeing again another relatively healthy session. This is now a definitive breakout above not only 25,449, but also 25,645. And lastly, 25,762. Yes, we still have technically an open window. So at some later date, I am expecting ultimately the industrial average to come on back down and to close this open window. But all things considered, for the time being, it looks as though we are going to see somewhat of a decent follow through to close this open window. It may happen as close as or as soon as by the end of this week, which is fantastic. Those diamond positions that we have entered into are working out tremendously well. And again, those profits are continuing to build. So very happy when it comes to the industrial average or the diamond positions that we have been accumulating during a rather stagnant period towards the back end of July into the early period of this very same month. Now, what I would like to speak about in this afternoon's market recap is a bunch of individual trade positions, because not only have we been focusing on that of the diamond positions when it comes to market arbitrage and opportunities trading the market indices, but we've also been keeping a very close eye on a number of other tech companies. Most recently in these YouTube videos, I've been referencing that of Netflix. We've been paying attention to Google. We've also been talking a lot about Caterpillar and Baidu. But today we started to see again breakouts outside of those recent open trades. What we have here is the screen of Apple. You can see today, again with about 10 minutes left in trade, up $3.42. This is now looking like a definitive breakout above 219.61. And this position is now profitable, which is really good to see. This is looking like we've gone through that of a very short-term sideways consolidation. What we've allowed to happen is for these exponential moving averages to once again get very close to price. However, we really didn't tag them even on the 10 exponential moving average before we have seen what is that of its most recent acceleration to the upside. So this is all making us very much so happy for those who took the Apple trade above 219.61. We started to see that of a breakout yesterday, but today being Wednesday, we have seen that definitive follow through, which is really good to see. So very happy, very pleased about the open trade at the moment on Apple. Now, taking this one step further, today we saw Amazon absolutely explode to the upside. If you go back and have a look at some of these trades, we've been looking at this above 1,888 and most recently above 1,924. Today we saw that acceleration, about $60 at the moment up. But what's most important is that we hit our target here at $1,990 per share. In fact, if you have a look at the intraday movements, if you pay attention to the high, we've got very close to that psychological round number of $2,000 per share. I'm expecting Amazon to more or less slow down currently, or at least very close to where we are trading at the moment, anywhere around that 2,000 psychological round number. So this trade, although it has been very quick, it has been very profitable, it has more or less run its course already. And it was a very short trade, really only 3 days most recently since the breakout on Monday, or 3 days including the breakout on Monday. And now we've hit our target at 1,990. So an extremely profitable trade here on Amazon. So as you can see, we follow 12 shares over on the left-hand side of my screen. If you've been paying attention to this YouTube channel, you've heard me speak a lot about, again, the Dow Jones Industrial Average and also some of these other stocks, one of which is that of Netflix. Now, again, this began to perform last week, and we have seen that of a relatively minor, but it has been that of a follow-through into this current week. You can see the past bullish trade at 328.90. This is off from this support area. We saw the original gap up on Monday, but really since then, we've just been trading sideways. So this is taking a little bit of a rest, a little bit of a breather. This is still tremendously profitable. We're trading just shy of $370 per share. And even if you round up the entry to $330, that's still a $40 profit margin from the entry to where we find ourselves trading at very close to the close on Wednesday. So not a whole lot to report on with Netflix, but it is looking like it's just taking a breath until it continues its move up to 392, which is something that I'm very happy about today. In IBM, we're starting to see potentially that of a true breakout to the upside, and I am still expecting IBM to come on up to 155.54 moving forward. But this is looking quite good. You can see that we are starting to form that of a series of higher lows, and it does look as though we're starting to make a very minor level sort of rotation of higher highs as well. This is very nice for the chart of IBM. We are holding above these exponential moving averages, so it's exciting to see that sort of progression that has taken a little bit longer than what we would have ideally liked to have seen this type of move play out on for IBM. But above all, at the moment, it is starting to move much like the markets themselves, all right, collectively pushing back up into their open, or at least for the Dow Jones, into its respective resistance area. However, we started to see follow through again on the NASDAQ and that of the S&P 500. Google is another stock that we've been following along with. We've been looking for the wave rotation back down into the support area to more or less once again react with that rising 50-day exponential moving average, and then to see the bounce off from this level. We'll have a look at what's happening to Google. The entry was 1,228 to the upside. We're now trading all the way up at 1,263. So again, we're starting to see some pretty decent follow through when it comes to Google as well. My target on this is 1,285. And again, we started to see this bottom last week, hence why we started to bring down the entry down to where it was placed at 1,228, up very close to $20 during today's session on Wednesday. Still expecting this to follow through and move higher. What this is going to become now with a bunch of these stocks is not so much trade execution when it comes to opening new positions. It is going to be along the lines of trade management and where to place those stops now that we're in a bunch of profitable trades. CVX is still overshooting to the upside. That's fine. Not really a decent trade there. The same is true with COP. You can see it's back up above 73.13. But at the same time, we're back up at multi-year resistance. I'm not going to zoom out in this particular video. However, it's still looking at least to hold this support area. It's still continuing to push very close to upon a breakout, but we haven't done so yet. Very similar to sort of CVX, however, a little different at the same time. You can see that we've got a sloping, so to speak, resistance area to the downside, and it looks as though we are establishing that of a bounce up to about 124 on that particular chart. Baidu again is still trying to sort of grip and bounce off from this 215 area. We've spoken about this in depth over the past number of weeks. You can see that we're lingering above 222.44. We're very close to 226.84. This is looking like a little bit of a bull flag setup. It looks as though this gap that really eventuated between Friday of last week and Monday of this week is now, if I can zoom in and show you this, is now more or less closed. You can see this really nice controlled sort of pullback from this open window just here, which is shaping up to be that of the bull flag. And it wouldn't surprise me to see the price action of Baidu essentially break out of what appears to be a very minor level resistance area that I'm just coloring for you on green, and to see this rocket up towards 238, but then ultimately up to 245. So pay attention to Baidu, stay disciplined, stay focused on that share, because I do think we are going to see a legitimate breakout moving forward. You can see today on the S&P 500, this is broken out, up very close to 20 points at the moment. We still have this open window. So again, going back into the analysis on the industrial average, when we do hit this target up here at 26,435, and if this window hasn't been closed at that point, we're probably going to see a move like this, which is also going to coincide with that of the back test on the S&P 500 to close its respective window, something like this. And then if I change to the NASDAQ as well, you can see that we have this open window between Friday and also Monday this week. The NASDAQ itself, the composite index, is up 81 points with now approximately 5 or so minutes, I believe, until the close of trade. But it's going to look something like this, which puts us back into orientation with this upward sloping sort of intermediate trend line as well. So although technically the markets are bullish, the true test is going to come when we see the industrial average close its window, the back test, which is going to eventuate, or the retest, I should say, to close these open windows. And then what is most important is whether or not these markets can hold this pullback area, which is going to coincide, as I just said, with this rising intermediate trend line. If we see the failure to hold these levels, and it seems rather impossible at this time, because again, when you think about the sentiment and just the price movements of the market, there's not a whole lot to be bearish about. I completely understand that, and sentiment is rather skewed to a very bullish extreme. But if we were, for instance, just work with me a little bit hypothetically here, if we were to see a pullback, it would come as a surprise to a lot of people. But what would come as even more of a shock would be if we started to break down below this rising trend line here. And again, you can see it very much so established on that of the S&P 500. So we're going to have to monitor this moving forward. But really what you should be paying attention to is that resistance area on the industrial average, and then coinciding with rolling out of positions. All right, once we get up into that resistance area, beginning to cull a portion of those open positions that are relatively profitable, especially if you're holding those derivative contracts or those open option orders on a bunch of those individual trades that I've just walked through, and also on the diamonds if you've chosen to actually leg into that as well. All right, so if you have any questions, email me, success@pivotpoint-trading.com. Enjoy your Wednesday evening, everybody, and I'll be back with you later in the week for another Market Addressed. Farewell.